Can you quantify it for me? Can you give me some levels that we should watch for?
Well, to the downside, I think the psychological level here is 5,000. That's a pretty far away from where we're trading today. But in Bitcoin speak, it really isn't, because we've moved massive amounts. We're trading at about a 70% discount from the 20,000 high we saw just at the end of the year. And I think that right now you've got to find a sustained trade at a level that the market can start to build on. Moving averages, momentum trades, they really mean nothing here, because we've talked about this for 7 months. Give me a track record that we can trade off of, and then things will start to maybe become a little more clear. But 5,000 is definitely a line in the sand where I think sophisticated investors will step in.
Hey Todd, it's Jeff Kilberg here. I'm not too far from you on the floor here in Chicago, but I want to ask you, what gets us to 5,000? I think you bring up a lot of great points about this confusing regulation, but that's been in the market for quite some time. So can you pinpoint what actually would be the catalyst? Is it simply going to be people getting out of their positions, because all the hodls do not sell? So we're not going to see stops like we typically do in some other commodities contracts, correct?
Right. No, I do agree with you, Jeff. But if you look at that day back in December when we printed that high prints in Bitcoin, what else started trading on that day? And that is the futures contract. So I think a lot of futures sellers will probably look to take chips off the table if we get down to that 5,000 level, maybe wait for a bounce and come back, because the futures is really what made this a two-sided market. Before it was Bitcoin, you come in, you buy it, and you hold it. But really, once the futures started trading, it opened the door for a second kind of trader, and that is the seller, one that was dearly missed on the run-up.